First of all, thank you very much for the invitation, and thank you very much for this initiative. I think we are also very supportive of this push, because just as a very brief introduction, because I understand there are no biographies, I've been working in energy efficiency for the last 15 years. I see many familiar faces. I've been hopping around the private sector and the public sector, and I myself still chairman of a couple of European energy efficiency funds who are also working in Italy but also in Europe. So for the energy efficiency agenda and why are there so few projects around, I think, and Peter has done excellent work on this in the past, it's a little bit, if you look at energy efficiency, the paradox is that it is quite a quick buck earned back. I mean, you invest and after 5, 6 years, 7 years, you have a payback on this. So why hasn't it happened actually? If you then fragment the market, and Peter has done much better than I stand to be corrected of course, but you see that the corporates, I mean the guys that are looking at the baseline, at the P&L, at the costs, they've all done it. I mean they're all up to scratch on it, they've all gone for it. But when you see in Europe where it has not been done is on the housing market. So the housing market and the public stock, so the public buildings that governments own, there's not a lot been done. And why is that actually? I mean, first of all, probably on the public, we are now in a crisis. There is a restraint on what debt we can do. You have to choose between a school or between a new hospital or refurbishing old buildings. So what do you do as a politician? Same thing on housing. What we have is that the problem that we have with housing is that in Europe, there are different models of housing. There are private houses, there are public-private houses. Who owns the block of the buildings? How are you going to do this? How are you engaged as a bank, as a financier with that market? And so I very much welcome the public push for this market and opening this market. We cannot ask the banks or the private players to do that. They need to see a market opportunity and they will jump into that market opportunity. So the more regulation is being put in place for new buildings, the more this market will grow. The more regulation that is put in place for older buildings and refurbishment, the more the market will grow. And then the question is, why are the banks not moving into that bracket massively? And I have my own analysis, having worked in a bank myself, etc. Probably it's not easy to go with very small loans to your credit committee and try to convince them to jump into this fantastic deal, with etc., etc. So the problem is probably the fragmentation. I think it was mentioned earlier. You need to be able to scale this thing. You need to be able to offer big brackets of projects or investments that you can go forward, etc. The second thing probably is that during the crisis, the regulatory restrictions on banks have been tightened a little bit, if I may say. So the banks have capital constraints, some countries more than other ones. So what can we do there as a public institution? And then if you look at the European Investment Fund, what we think we could do to help you banks to actually jump in that market opportunity, a part of the green bonds that were mentioned earlier, is actually help you in that capital constrained business. So the European Investment Fund is a AAA institution. It is owned by public and private, and its main business is actually providing equity, which is less relevant for this session, but it is also providing guarantees. So we provide AAA guarantees to banks. We think that for the energy efficiency market, a part of the big projects, which our cousins, the EIB, can deal with, but for the smaller markets, we need actually outlets. And the best outlets in Europe are the banks. You know these clients, you know these people, you have this kind of mortgages in place. So what we are offering from your side and in cooperation with the European Commission is instruments that guarantee part of your portfolio. So we have different instruments in place that we can provide to you. These are guarantee products. So we help you on your balance sheet to reduce the risk weighting of those assets and try to incentivize you that it makes sense for you to do that business. That doesn't take away that the project structuring and getting the projects off the ground still needs to be done. So there is somebody, another player that needs to play that. But for you, on the balance sheet, that is where we are open for business. We are working with the Commission on specific instruments. The name doesn't matter. The latest one is called Smart Financing for Smart Buildings, I think. We all get very smart. Which is actually basically a capped or an uncapped guarantee. Very briefly, technically, because there's a wide audience of banks, is what we could do is we can provide you, and that depends of course on the regulatory regimes in specific countries, but we can provide a guarantee that takes the first loss of the hits, or we can provide a guarantee that does a pari passu 50% of the hits on your energy efficiency portfolio. With that product, we think we would help the banks to take that exposure on board, and that is the limited product offering we would like to offer to the public here. If you want more details of that, I think you have all the contact details you want, I think. Otherwise, I leave some business cards, and I'm more than happy to provide you more information on this and the contact persons within the EIF to roll out that product.